In lending, one of the most difficult things is the cost of acquiring the customer. Most fintechs today offer personal loans, unsecured personal loans, or a two-wheeler loan. A lot of them either work with third-party agents called DSAs, or they go on Google, Facebook, advertise and acquire customers and clients. The way we think of it is that how can you build a lending business without a CAC? And that's the reason we partnered with points of checkout. So where customers come to shop, where they come to buy insurance, that's where we kind of embed ourselves there. Within 3 seconds, while you're shopping and checking out, instead of paying via UPI or your debit card, you can apply for a loan in 3-4 seconds, get approved, use that loan to make the payment and continue on your checkout process and journey. So what you'll see is the type of product that we offer is quite differentiated.
Hi everyone, welcome to another episode, and today we have a special guest, Gaurav Hinduja, who is founder of a rapidly growing startup, Axio. And we're going to learn how to build a fintech startup and how to run it successfully. So welcome, Gaurav.
Thank you, Sandeep. Thanks for having me here.
So Gaurav, I would like you to first introduce yourself, what you do as a company, and how do you start it?
Sure. So I'm the co-founder, like you said, of Axio. We are a consumer credit fintech company, and we provide small ticket consumer loans. So we are an NBFC that's registered with the RBI. And the main product that we provide is allowing consumers to shop online by providing them EMI facilities. So if you're on Amazon or a Policy Bazaar or a Decathlon, you can purchase what you want by getting credit from us in real time, right? So loans we offer anywhere from 2,000 rupees all the way up to a lakh of rupees. But the convenience and the affordability is what makes it easy to take a loan from us and buy whatever you want on these platforms.
And do you check any criteria, like anybody can avail this, or like is there?
No, definitely not. The entire secret sauce of the business is really how we underwrite, how we do collections. So we obviously check your credit scores. We have underwriting models. We understand your income, and then we determine whether you are worthy of a loan, and if you are, what size loan you can actually get. And then obviously when you use the loan and you start to repay back, then we give you a higher line or a lower line depending how your performance has been. And obviously, as in any lending business, collections is a critical component of the business, which is something that we do fairly well as well.
So, fintech, there are a lot of companies and a lot of lending companies.
Yeah.
How Axio is different and what different you guys are doing?
Yeah, I think, there are two key aspects. If I just look at the entire landscape of companies in the lending companies, right? You've got a lot of the old school NBFCs, banks, etc., where, they predominantly operate through an offline model, through branches, etc. And then you have the entire fintech model where none of the companies in the fintech typically have a branch, right? It is completely online. What differentiates us is the types of products that we offer, right? So most fintechs today offer, personal loans, unsecured personal loans, or a two-wheeler loan. I think today we are one of the only people that is offering a product known as buy now, pay later or checkout finance, where we are integrated deep into e-commerce companies and allow you to check out using an EMI as an option in real time. So within 3 seconds, while you're shopping and checking out, instead of paying via UPI or your debit card, you can apply for a loan in 3-4 seconds, get approved, use that loan to make the payment and continue on your checkout process and journey. So what you'll see is the type of product that we offer is quite differentiated. And two, I would say, the real focus of the company as a fintech, as a lender, is really how do you manage risk? How do you manage bad loans? How do you manage your NPAs? And I say that would also something that would set us apart from a lot of the fintechs doing lending in the country.
It sounds really interesting, and whenever I go for Amazon shopping, right, I would definitely love to try it.
Sure, please,
because many times what happens is net banking doesn't work, right, and some wallet doesn't work. So you are like frustrated what to do now.
I'm glad you actually brought that up, because if you look at all the payment instruments on e-commerce sites, right, like you said, net banking, credit card, debit card, success rates are only about 70-80%. So 20-30% of the time they don't work. Even UPI, if I look at it today, it's about 80-90%. But because we don't operate through a central network, it's a direct partnership with us and the e-commerce player, our success rates on payment once you are approved is north of 99%.
So one thing I was reading about you and your company, and I heard this term low and grow approach. For the rapid customer acquisition.
Yeah.
And I was talking to your team also, and they were saying we don't have to run the ad. So tell us more about it. How did you do it, and what is it?
In lending, one of the most difficult things is the cost of acquiring the customer. right? And so a lot of lenders, whether be it old school NBFCs, banks, new age fintechs, a lot of them either work with third party agents called DSAs, or they go on Google, Facebook, advertise and acquire customers and clients. Now the problem with that approach is, one is you're paying through your nose. It costs 2-3 thousand rupees, sometimes 4-5 thousand rupees also to acquire a customer for a loan. The second problem that you have while acquiring customers online for loans is there's something known as adverse select. The people who are most in need of a loan are the ones who are looking for it online, right? And sometimes they have the highest delinquencies. So the way we think of it is that how can you build a lending business without a CAC? And that's the reason we partnered with points of checkout. So where customers come to shop, where they come to buy insurance, that's where we kind of embed ourselves there. And that's how we acquire these customers. So we provide a service to the e-commerce company. So we are a B2B2C player in that sense. We provide a service for the e-commerce company, allow their customers to get credit so that they could buy whatever it is that they are buying. And in return, we give a free customer acquisition model. So which is why, as you said, we don't spend money on CAC. And the idea is, how do you, when you acquire the customer, start them off at a smaller credit limit. So we typically start people off at 10,000, 20,000 rupees. Watch their performance for 3 months, 6 months. If they are paying back the loans, then we will take that 10,000 to 30,000. 6 months later, we'll take it to about 50,000. And so you're actually growing with the customer through their life cycle. And 2 years later, you'll even offer them a personal loan of about 2 lakhs when they have larger episodic needs like a marriage or an education expense or a healthcare expense. So today, even after 4 years, about 70% of the customers that we acquired 4 years ago continuously use our product.
That's really awesome. I mean, that's
Yeah.
really great because a lot of startups struggle running ads campaign. They pay a lot of
Yeah.
budget to the company like Google, Facebook for the customer acquisition. That's where they struggle. I mean, they are not able to run the business in a profitable manner because of these things. That's really awesome. One more thing that I noticed was NBFC like Bajaj Allianz. They took 30 years to get
Yeah.
30 million
Yeah.
users, and you could do it in few. You could get 10 million
Yeah.
users in few years, right?
Yeah.
So tell us more about it. Like, how did you do it?
Yeah, I think that's the interesting thing between offline and online, right? So two reasons. One is, like I said, we don't have a branch network. Everything is online. So acquiring customers to that sense is easier. But I think the real reason is because we've been able to partner with large distribution islands or platforms like Amazon, Policy Bazaar, Xiaomi, Decathlon, etc. Right? Now these platforms combined together have hundreds of millions of users, and just the nature of what they sell requires credit, right? Because you're either buying a phone on Amazon, you're buying health insurance on a Policy Bazaar. These all cost anywhere from 5,000 to 20, 30, 40,000 rupees, right? So because these platforms already have hundreds of millions of customers, by just being embedded there, providing a good service, we've been able to acquire a large number of customers in a relatively short time.
Like, how did you come up with this idea?
Yeah, so it's been a journey. This is not the first idea that we've had. We've had a couple of pivots along the way. So I wouldn't say it's been an easy linear journey. But my co-founder and I, Shashank, we both graduated from business school at Stanford in 2012. Moved back here to India early 2013, late 2013, early 2014. And the idea was really, how can you leverage technology to do something different and disruptive in financial services, right? Back then, there was no UPI, there was no Aadhaar, there was not much internet penetration like there is today, right? And a lot of the incumbent players would take days and weeks to disburse a loan. So we said, hey, there is a need. Can we really find a customer? Can we allow them to get credit in a matter of seconds and minutes rather than the days and weeks and like lengthy paper and forms that it took to get a loan? That's really how the business kind of started. When we started in 2014, we were doing multiple products, SME loans. We were doing loans to Uber, Ola, taxi drivers, right? So we started 3-4 different products. Along the way, after some learnings, after pivots, right, around 2019 is when we settled on this model where we provide customers the EMI option, or as we call it, checkout finance or buy now pay later.
All right. So you told about Stanford University,
Yeah.
and a lot of people in India, they dream of going there.
Yeah.
So tell us more about your admission process there and your days there. How were your days there?
Yeah, sure. It was almost 12 years ago. So I'll break it up into two parts. The admission process, right? Like you said, it's a very difficult admission process. I think even today, only about 4 or 5% of the people that actually apply get into the business school. So in that sense, I was lucky enough to be one of the few that actually got in. I think the secret sauce to getting admitted into a Stanford is how do you prove that you are different, and how do you stand out from the crowd, right? We have a lot of great people in India, but a lot of the path that people take is very similar, right? Engineering, get a job for 3 4 years, and then actually go and apply to business school. Now, as a business school head, you're seeing hundreds and thousands of similar applications from India as well as from other parts of the country. So your job or your challenge is how do you stand out. And for me, that path was slightly different, right? I was in a family business. I spent a lot of time on my, garment manufacturing, which was our family business. I spent 6 7 years there. I was not an engineer by background. I was a BCom graduate. And the idea was always portray through your essays and your recommendations how you're actually different. And more importantly, once you get the Stanford education, what are you going to do with that? And this is where the essays come into, help. This is where recommendations come into help, and you're able to build a holistic application. So it's not just about the academics that you get or your GMAT score. That I would say is maybe less than 30% of the application process. Bulk of it goes in your essays and recommendation letters and proving to the admissions director there how you can actually stand out. So it was a great 2 years, probably the best 2 years of my life.
Must have been, right?
Yeah. No, I think two big things stand out for me. One is the lighter one, which was a lot of fun and drinking and partying as people typically do in colleges. So that was definitely fun, and making lifelong friendships. But I think the more important thing is the network that you build there, right? So for me, I'm not much of a studious person, right? I just do the bare basic amount that I need to actually get through school or college. So for me, it was always about the networks, the friendships that you can build. And more than that, you would also have very interesting speakers who would actually come. And because you're in the heart of Silicon Valley, you used to have a lot of, interesting entrepreneurs who would come and speak at the
Yeah,
business
I've seen
school.
the YouTube channel of Stanford, the kind
Yeah.
of people that come there.
Yeah.
Ratan Tata also went,
Yeah,
right? I mean,
yeah.
those are
One of
really...
my best conversations that I think when I was at Stanford was when Travis from Uber had come. They had just started Uber 6 months ago, and he came and spoke, and it was just probably one of the most fascinating things that I ever heard. And so actually one of the ideas was to come back to India and start a similar company, but that's a different story.
All right, Gaurav. So tell us more about your initial days. How did you start? I mean, how were your initial days? The initial finance problems, and how did you hire the initial people? Because when I started my company,
Sure.
I was a teacher in a college, and it was very easy for me. I had a crowd. I could figure out these three people are best in that batch. I hired them as interns. So how was it for you?
Unlike a lot of the other businesses, it's hard to get to product market fit in a lending business unless you've raised money. Because my business is to give money, right?
Right, true.
So it's not like we could develop a product, wait for customers to come, see traction, and then go out and raise money. I mean, from day one, we needed money
needed
because we were
money,
going to
right.
give a loan, right? So our approach has been slightly different, right? We went to VCs, right, very early on, started knocking on doors. Like I said, one of the advantages of going to Stanford is it would actually open a lot of doors for you. So when we came up with this idea on a PowerPoint, we approached many, many VCs and like, hey, let's do something different in lending in India. Let's digitalize lending. Let's do digital lending. And must have had at least 60 to 70 meetings and got 70 no's. Right? There was literally no one who thought that we could pull off lending because they said you don't have the experience, you don't have the underwriting, you don't have the collections experience. How will you digitize lending and do it? So it was very, very difficult in the early days to actually convince anyone to be able to give us money so that we can actually lend that money out, right? But I think after almost 6 months of meeting VCs, we finally were able to crack one, and we were able to raise the first $1 million, right? And most of that actually would go into loans. So hiring then became, a function of two things. Like you said, you have to have some network. For you, it was you're a teacher in a college, so you had enough kind of people around you who would buy into your vision. For us, that was not the case, right? I think whenever we spoke to people, similar reaction to the VC, like, how can you do lending? How will you get the money back? And so what we ended up doing, our first hire, if I remember rightly, was within a friend's friend, right? So we had to look for within networks that we had, and we reached out to first degree, second degree friends, and literally said, hey, can you please come? We've got money, but come and just join. So you don't have to take a haircut in your salary. You don't have to not work without money. We will pay you money, but just come and just believe. And kudos to that individual that he actually believed and accepted our vision, right? And so once we did that, then I think the process became a little easier, right? So we found a product person from within the network. We then had to look for an operations person. Now, Again, I remember this person still works in the company today. He was like, no, I'm not going to come and join. I just found him randomly on LinkedIn and like, okay, you were working at another lender. Why don't you come? He's like, no, I'm not going to take the risk. But I'm like, I'm paying you your full salary. You don't have to worry. He's like, no. He accepted the offer finally. And then on the day of joining said, I'm not going to come. And so
Oh.
we had to actually go meet him. And now it's been almost 9-10 years and he's still at the company.
Oh.
Right. So I think as we then, once we looked from within our networks, the second one is as we wanted certain, engineers, etc. We didn't have the right network. So there we then started to use headhunters. And like I said, because we ran it a little differently and raised money, we were able to kind of get headhunters who would help us, getting a CTO, getting the first 2-3 engineers. And I think that really got the ball rolling for us.
All right, so now you must be having a big team. So, what are the things that you follow to hire? And if anybody from the crowd, from the audience wants to join
Yeah.
your company, what are
Yeah.
the things that they should have?
If I think the biggest one for us is referrals, right? If you ask our teams, I think most of the people that we hire come as referrals because that ultimately is the truth in how your company is performing, what's the culture. If people who work for you can actually get more people, I think that is one checkbox that I think every company should be able to do, right? We do definitely use some level of recruiters, right? But we do encourage people to come to us via LinkedIn, come to us via our website, come and apply. You'll see the careers page, etc. All of that is there, right? But even today, I would say, I don't hesitate from sending LinkedIn emails. That is something that has worked. Sounds a bit cliche, but it's always worked for me in the past. And even when I'm looking to hire mid to senior level resources, I reach out to them directly and like, hey, this is me, this is what I do, this is what I'm looking for in a person, and I think you fit the bill. Let's have a coffee, let's have a conversation and chat. So I don't think there's one specific answer. I would say at a mid level, referrals, at a senior levels, just it's more about can you reach out to someone, do a cold call, and I still do a lot of those.
All right. I remember when I was working, I got a personal message from LinkedIn from a founder, and I was very surprised to see that the founder himself,
Yeah.
that also gives a lot of motivation for you to join
Yeah.
the company, right?
Yeah.
Because the founder himself is sending a request to you.
Yeah. And when a founder sends it, it's not very random, right? They've spent time on your profile. They've clearly understood why you're probably a good fit. It's not like somebody like me or any other founder is just sending 100 email requests. You don't have that much time. You are like looking at LinkedIn and saying, okay, these are the 3 or 5 people I think could really fit the bill. Let me send them and see, whether that clicks and whether that person is actually interested to join. So when you actually, like you said, get an email request from a founder, I think it has a lot of merit.
All right, Gaurav. So, how big is the team now, and how are you doing in terms of revenue and all?
Yeah, so today we have a little over 500 people in the company,
Okay.
right? So if I just look at various teams and departments, you've got engineers, you have data scientists who do a lot of the underwriting, the coding, building of product. We have customer service, we've got collections, HR, finance, right? So it's a pretty well diversified team of people who come from financial services as well as come from technology companies. And we built a good culture of this fin and tech, and they work hopefully very harmoniously together.
So, for the aspiring fintech entrepreneurs, when you go into fintech, there are a lot of compliances,
Yeah.
lot of security, customer data security issues. So, how much challenging it has been for you, and how did you tackle these things?
It seems like a challenge at first, but I think that really becomes a moat in the business. And we have actually seen that play out in the last 2-3 years. There were a lot of companies that took shortcuts when it came to compliance in the last 3-4 years. And I think many of them have paid the price, right? RBI is very clear what are the compliances you need to follow as a lender, whether it's KYC, money laundering, AML, whatever it is, right? The checklist is very clear. It is not easy to do. You have to have the right teams, you need to have the right software, you need to have the right licenses, and it's not easy to get those licenses also. But once you do that, right, and are actually regulated by the central bank, right, you have a certain level of responsibility to your customers, whether that's following privacy norms, security norms, whether that's following the right collections protocol that the RBI lays out. That ultimately does two things. It builds trust in your partner, so likes of an Amazon, a Policy Bazaar, a Decathlon. They're like, okay, this person is regulated, they're following the letter and spirit of the law. Let's work with them over somebody who's not kind of regulated. Second, it actually takes time, but investors start to see that even though your growth may be slower compared to an unregulated player, that this is the right model that will actually attract money in the long term, right? So I think being regulated, being compliant, is difficult, no doubt, but definitely has its advantages and becomes a moat, uh, especially if you're in a regulated industry like fintech.
In fact, this compliance and all those things, if you are into B2B business,
Yeah.
even being an adtech,
Yeah.
if we go to a big company and we try to sell something to them, they have a long onboarding process
Yes,
where they
yes.
check a lot of stuff. And if you're
Yes.
not fitting there, sometimes it takes even months for the vendor onboarding for them. And if you're not compliant at any other place, you will be losing a lot of business. So it's
Yeah.
very, very important to have proper compliances from the day one. People seem to like ignoring it when they
Yeah.
begin, right?
And I don't think in financial services, whether it's lending, insurance, whatever it is, you cannot take compliance for granted. You have to be able to check off every box when it comes to compliance.
All right, Gaurav. So apart from compliances, if there are people in the audience who also want to build a fintech startup like you, or maybe a different fintech startup, what are the lessons that you would like to give them? What are the learnings, mistakes that you had, and you want the budding entrepreneurs not to make those?
Sure. We made a lot of mistakes, right? I'm proud to say that we made a lot of mistakes in our journey, and we've learned from those mistakes as well, right? So I think some of the lessons that come to mind are, one is, try to stay focused. Don't get sucked into FOMO, right? And as entrepreneurs, it's very easy to have this fear of missing out, and you want to do every product, every category that is possible. Especially as an early company in the lending business, we started doing SME loans, consumer loans, car loans, everything, right? And it was too early for us as a company to be so diversified. And so after 3-4 years and going through ups and downs, we said, okay, this is too much for a small company. Let's cut back. We scaled down a lot of our products and then doubled down and focused only on what we do today, which is the checkout or embedded finance. And that's when we really started to see a lot of growth. I think the second thing is, if you just focus on just pure sales versus product, right? Sales will give you traction in the early days, but the business doesn't become defensible. So I would say in the first 3-4 years, we were a very sales driven organization. But in the last 3 to 4 years, we become a very product focused organization. And because of that, we've seen our customer count actually really skyrocket. I would say the first 5 years we did maybe 200,000 customers. In the last 5 years, we've gone to 200,000 to almost 10 million. Right? And that real growth came because our change in focus from being sales to a product led organization. Third thing, like in financial services and fintech, you are going to go through cycles no matter what. Now, fortunately or unfortunately, in the 10 years that we've been around, we have seen demonetization, we have seen GST, we have seen ILFS, we have seen COVID, and now we are seeing the RBI created, around unsecured lending, that there is a crisis coming, right? So, in 10 years, it's pretty unusual to see five crises, but I think you have to be ready to deal with the ups and downs. And so having, people you can rely on and people who are there with you through each of those cycles and implementing that playbook in the next cycle becomes a very, very critical learning, especially in fintech and in financial services.
And those are very valid points. Even I run a tech company,
Yeah.
and what happens many times is there is a new tech company that comes in, and they comes up with a new idea with a lot of investment.
Yeah.
And my team tells me that we should also do it.
Yeah.
There's a FOMO among the
Total
employees
FOMO,
also,
yes,
and they come to
yes.
me with different ideas. So that becomes really difficult for them to convince. Let's stick to our basics.
Yeah.
Let's do what we are best at, right?
Yeah.
And let's continue doing that. Let's focus more on our product. We might not get some immediate sales, but product should always be the top
Yes.
priority. That's
And
really
it's hard to convince people of that.
right. I mean, they are very confident that
And
we should do it.
we've also made a lot of those mistakes, right? So we've also gotten tempted. We're like, okay, let's do this, let's do this, let's do this. And then we're like, wait, it's 3 years later and you have 16 products as a young company. It's just not possible.
Right, that's very well. I mean,
Yeah.
we also did these mistakes
Yes.
in our initial days. Tried multiple things because employee comes in and we said that's a very good idea. Let's try it. And then after
Yeah.
some time, you realize that we made a mistake. We should have stuck to our
Yeah.
basics and
Yeah,
what our strong things are. All right. So you have been around for 10 years. You've been doing this for 10 years, and now you've reached really a good stage. So as a founder or as a CEO of the company, there must be like you have expectations from employees.
Yeah.
You have expectations from family.
Yeah.
You have expectations from investors, and everybody is expecting from you. You're at the center, right?
Yeah.
How do you manage all this?
Somebody said entrepreneurship is fun. It is fun on half the days. Half the days is a very high pressure job for the exact reason that you're saying, right? There is always somebody who's wanting something from you, right? If the investors, they want a return, right? They want to see growth. They want to see revenue growing, they want to see profits growing. So there is a lot of pressure, right? When you work with partners such as our e-commerce partners, they want you to grow the business while keeping risk low. Then obviously you have your teams and your employees who obviously want their own financial freedoms, their own financial success, because they are relying on you and they're relying on the company to do well, right, for themselves and their families. Then there is your own family, like who wants your time more than
Time,
anything
right? They
else,
they need
right? Who
more
wants your
time more
time?
than.
And ultimately, once you try to satisfy everybody, whatever little bit brain power and bandwidth you have left, you're trying to do good for yourself, right? And what I've realized is, and this has again been a learning over the last 2 3 years, first solve for your own mental well-being, your own emotional well-being, then you can actually solve for everything
True.
else, right? It
Yeah.
just, it doesn't happen. You will drown in the weight of expectations, and not that anybody has bad intentions. It's all good that they have these expectations, because that's how everybody progresses. But if you get into the stage of trying to be in the rat race, trying to fill and check every box, ultimately what gets sacrificed is your own health, mental, physical, emotional health. Until you don't solve that, nothing else can actually, you cannot solve anybody else's expectation. So my mantra nowadays, or my philosophy is, figure out yourself, figure out your emotional, physical well-being, and then that gives you the ability to help and serve others.
I mean, I face this challenge myself also
Yeah.
because everybody around me has expectations from me. And I do a lot of office meetings, so people tell their problems.
Yeah.
So what I do time to time is I take a break. I come to Bangalore. I came here and I stop all the meetings. I talk to only few people in office, and that works for me. So I saw your podcast also. You focus a lot on fitness,
Yeah.
right?
Yeah.
So what kind of things apart from what do you do actually to have that mental peace? For example, I do this take a break.
Yeah.
I talk to people, network people, come,
Yeah.
and that's what I started recently because I also started having issues with a lot of expectations.
Yeah.
So to build that mental peace, to have this thing for your own, what do you do?
Yeah, I'll just come to that. But your question on expectation, I think there's one category of people I didn't talk about in terms of expectations, your customers, right? Especially in our business, when a customer doesn't have funds, right? They write to you, they write to you, call into your team and say, boss, I don't have money. Please allow me 15 days, 30 days. Please let me, give me a settlement and let me close my loan for 50% less. Now, all these people, most of them are genuine. But if as a company, if I was to be understanding and expectation to all my customers' needs, I'll be writing off 50% of my loans. It just doesn't work. You want to be empathetic to your customers, and that's their expectation because they only think about themselves. But as a person, as a lender, if you end up being empathetic to your customers, you're going to land in a bad problem, and your revenue and your business is never going to make any sense, right? So to your point, I think to handle a lot of the stress, handle the weight of expectation, for me, over the last 3 4 years, I've been able to find and resort to fitness. Right. So what this does is two things for me. I typically do 1 to 2 Ironman races a year. So this is a long distance triathlon where you swim, cycle, and run. I think preparing for that requires almost 12 to 14 hours of working out every week, right? And when I exercise in the morning, I'm up by 4:35. I spend an hour and a half or two of exercising every morning before I get to the office. I think that just puts me in a good mood. Not on all days. Of course, everyone has their good days and bad days. But most of the time, when I see that when I do my exercises and I go into the office, I'm much more at peace. I can handle anything that is thrown at me that day. And second, I think when you do and take on a tough challenge like the Ironman, I think it just makes you mentally stronger because like you are in that zone that says, if I can do that, which is a 14-hour race, if I can do that, I can handle anything, right? So the exercise part of it and the challenge of actually completing a difficult race keeps me physically and mentally fit.
And this exercise thing is must actually. I was not doing any exercise
Yeah.
and I started yoga recently
Yeah.
and it works really good. I
Yeah.
mean, it keeps you energetic, it keeps
Yeah.
you motivated.
Yeah.
Started following some fitness videos and
Yeah.
that worked really fantastic for me. I mean,
Yeah.
working really great.
Yeah.
So, Gaurav, any final message to the audience, budding entrepreneurs that you would like to give?
It's easy for me to give advice saying like you're going to go through tough times, you don't give up, do all of that stuff. But I would say the only advice is, again, you don't always have to follow the advice that people are giving you. You will hear everything on the internet, you will read on books. You have to work 16-hour days, you have to work 12-hour days, you should be passionate about what you do. There is no one model that fits all. Shashank and I were not passionate about lending before we started this business. We wanted to start a business and we found this business. It's not like we were trying to receive a loan or get a loan, nobody gave us a loan, and so we started this business. Right? So it's not that you 100% have to be passionate. Again, it's not that you have to work 70 hours a week, 100 hours a week. I don't work, I have a fairly decent work life balance that prioritizes my family, prioritizes work, and even my fitness goals. And I enjoy work. So you don't have to be on this extreme that as an entrepreneur you have to work 70, 80 hours a week. Yeah, I work hard, but I don't go kind of crazy working hard, right? Third, if the business is not working, right, take whatever action you feel fit, that you are the one who's best in that position to be able to take whatever action if the business is working or it's not working, right? So my only advice is, don't try to live your professional life through the lens of someone else. Everyone has their own situations, everyone has their own successes and failures. Be true to who you are and see what best you can do.
Great. I mean, that's great. So that is all, Gaurav. And to the audience, I would like to say that it was really, really fun talking to Gaurav. I personally learned a lot from a fellow entrepreneur. And there are a few things that I really liked about Gaurav's conversation was one thing that he mentioned is, your product should be top priority than sales and marketing and other stuff. If your product is good, then you would definitely succeed. And one more thing that I learned is even if you are a Stanford graduate, you might have to knock 60, 70 doors before you get your first investment. So if you feel like that I've done enough hard work and I'm not getting it, I should give it up, you should think about this story, right? And the last thing he mentioned, right? You don't have to think from the lenses of others. You need to do what is actually right. So great, Gaurav. Great talking to you.
Thank you. Thanks,
Thank
Sandeep.
you.
Thank you for having me here.